All right, it is February 28th, 2021. We're going into the week of March before the next trading day starts. And this is sort of my analysis of the stock market going forward. So, this last week or two, I guess really since February 19th, we have had an inflection point where the market, the market first popped this long-term trend line going back to really since I think 2008, the bottom here. Then we have some reactions along the way. This was sort of the support level for the market. 2018 broke trend, and since then, I guess in 2020 when the market crashed, there was a rollover here, and now in 2021 there has been a rollover. So we have failed to stay above this sort of pretty significant trend line, which is a bearish sign for the market. Unfortunately, I think I was too doubtful of that and didn't take advantage of it once we broke below. And you can see, I think maybe I did take advantage of it in some ways, but we recovered and then we failed a second time. And that's probably the signal where you really want to go short. And so we had a breakdown, and then basically, I guess this purple channel was the channel we've been in since October. So basically, since I guess really you could say it was established in November after the last market correction. So you know that the fact that we broke out of this channel means there's a difference in the characteristic of the market. That's what I'm reading from this. And you can see that it may be that we are entering a new, less steep trend channel. It depends on whether this holds going into next week. I really don't have a good sense of whether we're going to hold this or not. I know the Qs settled on a pretty significant support level. This level down here was significant. You can see we have, I guess that's the 50 EMA here, either the 20. So we have the 50 EMA that we bounced on. So it remains to be seen whether we're going to stay in this trend. I really don't think we're going to recover this purple trend channel, so we may be entering this new trend channel, and that would be, I think that's a sign that the market is starting to roll over. You can see we've had a bearish divergence leading up to this event. Really started to put it in here, and when we had basically a lower high on the RSI and a higher high on the market, that was basically a signal that this was a very weak new high, and this breakout probably wasn't going to last. I wasn't really sure myself. In retrospect, it's a little bit more clear. And so we have that rollover. Now, I guess the question is, if we do break this level, what's the next likely area? Like if we break this, meaning close daily below this trend channel, then that probably means, we're going to move quite a bit more for a correction. And I think probably, there's a chance we move down here and bounce here at this 368 level. But I might take it as something more significant, and we would not ultimately reverse until a more significant level, like this 353 level, which is the top here, basically the top before the market or previous market correction, or near that top, just below it. The next level I would be looking for, and I guess the question is why pick this level? Another interesting reason to pick that level is if you do a Fibonacci retracement. Let me just get rid of this real quick. So from the lows to the highs, where does that retracement level go? I guess that goes, okay, so my bad. This would actually, the 38 level on this Fibonacci retracement, oh, okay, so we have two possible levels, this 23 level and then this 38 level. I'm not sure where it's most likely to retrace, but if that is valid, you know, I don't really use the Fibonacci tool, but I thought it was interesting that the two levels that were on there line up right with here and here. So it may be that we move down to either somewhere before the pre-March high and this high of the last real correction we've had, or pre-correction we've had. So I think if we fail to maintain and bounce here, that's what we're looking at. Otherwise, we're probably going to remain in this channel and more slowly roll over. I think that's probably more bearish for the market because we'd be continuing an uptrend, but it would be a weaker uptrend. And that would tell me that maybe retail buyers are still buying, but you know, bigger money is using that as an opportunity to sort of get out of the market. That may not be correct, but that's I think a possibility. At some point, you know, the smart money will be getting out of the market, and I think this is a good area for them to do that, considering, you know, sort of the patterns that have been forming. So I'm going to go over to the triple Qs now and show that we have a similar long-term trend line on the triple Qs. Well, okay, not similar. This one, I guess, goes to the March lows. But it has a similar effect in that well, I guess we spent a lot of time above it, but then we finally broke down on February 17th. And yeah, so we were above this purple channel, which makes this look more like a blow-off top, where, you know, a little bit of overperformance and then a breakdown. And I think if I would have seen this earlier, I would have seen that, yeah, this is pretty bullish, that it just keeps going down. But now we're below this channel, the purple channel, and below this trend line for, I guess, since the March rally or March lows. And so now we're kind of here in no man's land. We might get a nice bounce off of here. This is sort of a line of support and resistance here. And you can see we've had 3 reactions on this level. So I'm not sure whether this is consolidating to break back up and maybe retest this purple line and maybe reestablish a new sort of uptrend similar to what I was seeing in the SPY, or we continue to break down and maybe have a bigger correction. The level where I would expect it to correct to is similar to the SPY, meaning either here at this 299 level or this 268 level. So this may have a lot of downside. I think, you know, I'm just going to wait and see. I can't really say what is more probable right now. I do know the previous corrections, you know, the significant corrections, you know, 14-15%, and we've only moved about 7%. So I think it's pretty likely that given we've broken down, pretty much all of the trend lines you can draw on here, that we head lower before we finish this correction. And from the highs, this would bring us, if we moved to this sort of September high, or in this area, 11%, move a little bit lower, 12%. And if we moved it all the way down here, that's a 20% correction. And the NASDAQ has moved a lot. These tech stocks have all been super overheated, so we may move all the way down. So yeah, I'm hesitant to go long. It looks like there's a lot of good deals on stocks. Tech stocks, that are sitting at support, that has been support for several months. I'm hesitant to buy those, and in fact I tried to buy them, but I just talked myself out of going long these stocks during this correction. I got in long and then got out because I'm too nervous about being long right now. As I get more experience, hopefully I will have a little more confidence. And I guess the worst case scenario is if you do go long expecting a bounce, you just set a stop and you'll lose probably some money. I don't think there's going to be any crazy gap downs. This doesn't really feel like the end of the bull market yet. And actually, on that note, I should show the VIX, which you can see we didn't even make it to previous highs yet on the VIX, which means there's not a lot of panic. Now we can get there if the SPY continues to sell off next week. I'm sure we'll get there, but this is sort of a topping pattern. I think it's called like a tweezers pattern. If there's two candlesticks right next to each other with long stems on them, although this has a long shadow or bottom part of the candlestick as well. So this may be a reversal signal. We'll have to wait for confirmation. Right now, the VIX is in no man's land, so it tells me it's almost a 50-50 of whether it goes up or down come Monday. So if we look at these FANG stocks, you can see Apple's been in a long uptrend, and this green line or this green boundary is sort of the upper and lower boundaries going back for a bunch of years. But shorter term, I guess since March, we've been in this uptrend, or mostly respecting this trend channel. I guess this isn't really valid. Maybe just bring it up here. Okay, so we've had a couple different trend channels. Most recently, though, we have had this rising wedge pattern, which has been broken. And that tells me this is probably going to consolidate more. I'm not entirely convinced that this is going to make another big move to the upside above the previous high. The high may be in for this Apple, and we may see more returns in other stocks, but this may be it for Apple. It probably will consolidate for a while before ultimately deciding which direction it wants to go. If it's really bearish, it'll break down below here. I really think we're going to see a nice bounce, maybe up to this level, before there's any chance of downside, further downside for Apple. Because what would we had, a 10% move already, almost without any breaks, which is pretty significant for Apple. We could consolidate and break higher, but you can see what makes me think we're probably not going to do that is this failed, I think, to reach the new target for a new high. You can see that at least I expected around a 20% new high. Now, I still don't know if this method of determining, this type of pattern where the new target should be is valid. I guess actually no, we did meet that new high level. We just got over 20%, which is roughly what it would be expected. And so maybe that's it. Maybe we hit that high, but now the stock needs to consolidate and it will break higher. So you can see I kind of think that the top isn't in yet. It just doesn't feel like the top's in the market. There's too many people that have been skeptical before the sell-off, including myself. But we'll see. I as I said, it's important to be cautious, but the sell-off might be just about over on Apple. Maybe it goes a little lower, but I don't think it does. I guess you could say maybe it'll retest this trend line down here. I guess that's possible, but it has had a decent sell-off for a correction. Google, what's interesting here is that we had a kind of what looks to be a false breakout, but it hasn't given up yet. I think we have to, at this point, finish filling this gap and at least retest this previous trend channel line or trend line. So I expect it to, have another day or two of downside before a chance of upside again. But I really don't know. Maybe this, like usually when you have a rising wedge like this and it moves up, breaks out to the upside and then fails, usually there's more downside. So I expect if this does fail, then we probably fall at least to this level down here, maybe a little lower. And then maybe we consolidate and break higher after a couple months. So we'll just have to see. Facebook has already been showing, it's basically been consolidating, and you can see, well, there's not a lot to say here. It's kind of in the middle of the range. Nothing too exciting there. Amazon, now this did have a kind of consolidation pattern, this sort of funnel consolidation pattern. And it tried to break to the upside, it failed. And then so now it looks like it broke to the downside, which I would say is pretty bearish for Amazon. Now if you take these away and say maybe there was nothing like that, yeah, maybe it just moves down to this $2,900 level and consolidates for a while. I don't think that's going to happen. I think most likely there's more downside. And yeah, I guess there's this mid-trend line that it looks like it broke below, which that's not good either. It's too hard to tell because this mid-trend line isn't very clean. So probably we'd get rid of that and not use that. But either way, I think Amazon looks fairly bearish now, even if you just say this was the trend line we're using. At least on the bottom of it. Yeah, I don't see any way to say this is bullish in the short term. I see more downside. Netflix, I think this is moving down further as well. You can see we had tried to break out in January, failed, had another, consolidation, failed again. So I think we're going to move to the bottom of this consolidation area, and we'll see. It's been trying to break out, or it's been consolidating since July of last year. So I'm really not sure what to expect on this. I think, if you're consolidating this long and you haven't broken out by now, there may be something wrong. But, consolidation patterns can last for years in some stocks. So TLT is interesting that I want to bring up. And I think this has to do with the sell-off that we saw in the starting, I guess, most heavily in the tech sector was the TLT. Now you can see we've been in a long downtrend, meaning people are dumping bonds. They don't want bonds. And sort of the effect of that, I'm not sure. Well, yeah, one of the effects of that is that yield rates have to go up on the bonds, which directly or indirectly, I'm not really sure, brings interest rates for borrowing money up. And that makes tech stocks, growth stocks less attractive. So this broke down out of this area, and then it had a nice sharp bounce. Yeah, basically, yeah, the bottom fell out of this. It had a sharp bounce, and so we'll see. This may retest and break down again, or continue down. That is a possibility. But considering we were starting to put in positive divergence here, I'm wondering if this was just, this is the bottom. If it's not the bottom, there's going to be a significant rally before we see a new low. So I'm curious to see what happens with this. If we do see a new low, that could be really bad for, stocks in general, not just tech stocks. And part of the reason is, well, I guess if you go over here, the 10-year treasury yield, which the TLT is the 20-year treasury yield. I've been using the the TLT is the 20-year treasury bond ETF. The US 10-year is just the 10-year yield. So you can see we, on, I guess, February 25th, we broke this 1.5% level, and then we bounced hard off of it the next day, which tells me this is likely a top. If it's not a top and this consolidates for a while and then breaks higher, well, that's pretty bad. The highest I expect it to go is probably around here at this 1.6% level, and that kind of goes, it's a long-term trend line. Maybe it goes a little higher. It's not super well respected. But there are quite a few, general reaction points on that trend line. So there's going to be some sort of reaction there if it does break above and go to that level. That's my expectation. Now, the 1.5% level, interestingly, was the level where this began to basically fall off a cliff back in the March crash of last year. So is that a coincidence? I'm not sure. It just seems a little bit interesting that we can't really make it above that level without the market having a fit. The DXY appears to be putting in a bottom. Well, actually, I really don't know. It's in a slight downtrend. It broke out of this pink trend, or this pink falling wedge, but it failed to reach this $92 level. So it could be consolidating to break higher. I think probably at this point, it's more likely that it breaks down. Well, actually, I really just don't know. What I've seen is a lot of times, well, if it would have broken to the downside and then fails to continue, then I would expect it to break up. So for a falling wedge, breaking out and then consolidating for a while is actually probably means it's going to break higher. That's what I've seen more often than not, is that it'll eventually move higher. But this is a weird, if it consolidates too long and does a bunch of back tests of this level, then it may fail and break down. So we'll just have to see. And you can see that happening almost in gold, where you broke out to the upside. Now this wasn't a falling wedge, but it broke to the upside and then consolidated, and then broke back down below. So gold is looking, I mean, to me it looks pretty weak, but like a bottom might be coming in. When you see this big of a down move at a break, well, yeah, we may see a bottom soon. That's what I think, but it's hard to say at this point. If we, go back down to this previous resistance level or this previous trend line and don't bottom out there, well, then I'd be pretty nervous. In fact, if we don't bottom at this $1707 level, which is, I think, the 50% Fibonacci retracement level, if you go from here to here, that's like the 50% level between those two. So that's probably the absolute bottom I expect. You've got good resistance or good support at 1730, good support at 1700. So somewhere in that range, if we don't get our reversal, I am concerned about the dollar. And I think this dollar's fall was partly driven by the 10-year yield basically breaking out back here. Gold tends to track, well, you can see that gold has a very similar, it's almost correlated to the TLT, or it's pretty highly correlated to the TLT. So the TLT breaks down and then gold breaks down. That's not too terribly surprising. So if there's a nice reversal on the 10-year yield or the TLT, that may be the signal for gold to break out. And you can see this happening, if the Fed announces that it's doing yield control or something to up its purchases of treasury bonds, that may cause a reversal in gold. That may be the catalyst we've been looking for. I think it's clear to me that there's not enough buyers of the 10-year treasury. I think I heard something about the 7-year treasury auction or something, 7-month, 7-year, one of those two. It had a record low, basically. It was a really bad auction. Very few people were interested in buying those treasury bonds, and so it may mean the Fed has to step in and do the buying to keep the interest rates from going out of control. We're sort of in a situation where we can't handle very high interest rates for the market, for the government debt, all those things. So either the Fed has to step in and act, or the market might crash before the Fed has a chance to act. So I think we're at a really critical time still in the market. So after all of that, we've got a couple stocks to go through, and I'm just going to try and quickly move through these. I'm not really going to go too heavily on commenting on them. I do want to point out some things though. So these are, I guess, my trade ideas for this week. I don't know how much I'm going to trade this week. I'm already in a bunch of positions, so I'll probably just watch those positions, but there may be a couple new positions to open this week, depending on the ticker. And so I've got some bearish positions, some bullish, or some bearish and some bullish, I guess, tickers that I'm looking at for trade ideas. So WHD, this has been an uptrend. It's got, I guess, not really negative divergence yet. This sort of broke out above. Okay, so I guess this would be a bullish trade, possibly. This broke out of, a long-term, slightly downtrend line. And, no bearish divergence, or, yeah, not really. Maybe very slight bearish divergence. And so it broke out, so it may have upside. And it may be good for a long trade. If it breaks back down, then short trade. D-Dog. This one, I was expecting it to break out to the upside, and you can see it did, sort of, but it double topped after this consolidation, which I would say is bearish for it. When the market turned down, D-Dog went with it. Now it's currently below this this trend line. So I think right now is a good entry for a short position. If it actually is going to go in the direction, that if it is actually breaking down, then it's likely that there won't be much of a chance to get in unless it consolidates around this area for a while and then breaks down. So we'll see on that one. Right now, I think is a good entry for a short. May not be by Monday. Okay, so box. This is another one where I'm looking to either buy the breakout or sell the breakdown. It's a nice consolidation pattern. You see we had a false breakdown already, so that may mean it's pretty bullish. So we'll see. The tech sector, it's interesting that this hasn't really been affected by the tech sector sell-off. So we'll just have to see on that one. If the tech sector has a nice turnaround and this breaks out as well, I would take that as a buy signal. I'm probably, not going to buy it, but that I think would be a trade. Allo, you can see it broke out, and I got out of the position somewhere around here, and it's consolidating to break out again, I think. So basically a break below this shorter term trend line would be a signal that it's continuing its breakout. Sell H, this is one where it looks like it's still in a pretty decent uptrend. You could probably say that there's a nice trend line here and a bull slash funnel consolidation, or bull flag slash funnel consolidation here. If it breaks to the upside, I guess at a minimum 30% upside, maximum probably closer to 100%. So that may be a good short-term swing trade. Solo, this is one where it's in a nice uptrend. It still looks strong, and it's been consolidating. It looked like it broke out, but then it failed. So now I would be looking at, maybe this is a back test. I don't really like it as a back test because, to me it just doesn't look like a proper back test. A proper back test probably would have been, this was it for the back test, and then it would really break out. So the fact that it's sort of slowly rolled over, that makes me nervous. But if it does break out above this level, that may be a buy signal for a basically breakout trade. Pan American Silver, you can see this is a big silver miner. It's been consolidating for a while, and there's a clear line here where if it breaks out, there's probably going to be a good amount of upside. I would say probably a minimum, 25-30% upside for the breakout. Sono, this is one that looks weak. You can see it's been in a uptrend, kind of broke up, and has been in a steeper uptrend. One thing I don't like about this is the negative divergence we did have back here has sort of been, I don't think it's really intact still, but we may have a drop below this, 10% drop from this, secondary breakout down to the trend line or below. You can see there was on the hourly chart a shorter term uptrend line, and it broke down, or it's starting to break down. So it may be a good entry for a short position to either down here to this first trend line, which I don't think would be great, but if it broke all the way through, if we're actually in a real bull or bear market, then there's a good 50% drop in Sono. So it has to go through a lot of levels. Maybe isn't a great swing trade, maybe is more of a series of day trades. I'm not really sure. The best way to approach it, probably, I think this would be an objective area to enter short and then just see what happens. Because there's not really a lot of support above this $28 level. Okay, plug. This one wasn't looking terribly bearish, I guess, until right about here, where we started to put negative divergence. And I actually took a trade back here, got scared out of it, or I think it was maybe here. Yeah, I took a trade here, got scared out of it when I saw this. But anyways, we've got a long-term trend line, this purple line, and we've broken below it. The green line might be a secondary trend line, but it's not. It doesn't have nearly as many reactions. So I would say this, if we open below this and get an impulsive breakdown candle, I kind of don't trust these back tests very much after the number of sort of false breakdowns I've seen, or back tests that keep back testing until I get stopped out. So I would probably want to wait until, at least on the hourly chart, really strong breakdown from here. And you can see we already failed once to break down there. Snap. This is one that has never really, it's been an uptrend, but then it gapped up and has been a shallower uptrend. So to me, this is sort of a weaker uptrend, but it's not really putting in negative divergence anymore. It's still in an uptrend. I would wait, maybe 1 or 2 weeks out. This would be a short trade. Upwork is, I guess, similar in that it's broken out. This actually did have negative divergence though, and it looks like it had a blow off top. Right now it's sort of deciding where to go. I think if it breaks below this level, this lower trend line, that's probably the short signal for sure, and short it down to fill this gap back here. Etsy, this is one that I would say broke down a while ago, and then it did a back test. It's been kind of a complicated chart, or a messy chart. Broke down, it wasn't an uptrend, broke down, basically broke out but never recovered. There was a secondary uptrend, broke down out of that, never quite recovered, and so it's been just slowly rolling over, and I think that rollover is going to continue. And once it does, say breaks it below this level, that would be a good area to go short on it. I guess you could also go short at the top of this to the bottom of that trend channel, and possibly to the breakdown. So I like this for a short entry. I think, this was one where I was just too early on shorting, or my vision for what the breakdown would look like was just wrong, and so I missed got stopped out of a few trades on this one, I think. Okay, STMP, this one might actually be a long because it's already broken down so much. But I guess here's the two scenarios. It's at major support right now, so if it bounces, then that's a long, a pretty good risk to reward trade. If it breaks down, then that's a short, and you've got good ways to go, either here at this, $97 to $100 level, or down here to this $85 level. So it could be a real correction, a huge correction, depending on where it goes. Palantir, similar story in that it was in a strong uptrend, broke down with this market downturn, and now it's at a pretty good support level. So I'd be looking for either a long at the bounce or a breakdown short. And whether I like the posture is long or short also depends on the market as a whole. If just this stock is breaking down, maybe but the market is roaring up. Well, I guess that would be something where you would look for news on why it's breaking down without the market. So Yeti, this one, I don't know if I'm looking to, well, yeah, I'd probably be looking to trade this short as well. It's been in a rising wedge, and then it broke out of that, and you can see there's sort of a secondary uptrend it's been in now. And you can see it double topped here. So I think it's very close to actually, having a meaningful breakdown. And this is one where I want to point out, and you'll see it in a lot of places, where the steeper uptrend is broken and transitions into a shallower uptrend. So it's still technically a bull market, but to me that says it's a lot closer to, it's sort of a slow rollover, like rolling over the top of a hill and then eventually rolling down. That's kind of how I see it. And so once the momentum starts to the up or downside and it starts making lower lows, that's what I'd be, saying it's an up bear market. Okay, so ASML is just at the beginning of its rollover stages, but you can see it's got really strong negative divergence. So if there's an entry right here, right here is an entry, it may have a sharp downturn and before it bounces. So it's probably a short entry now if there's a nice strong down candle. Well, I guess there kind of already was, and it's just not quite ready to roll over yet, or hasn't been. So ASPS, this is one I was looking at a while ago, this nice sort of funnel pattern. I misjudged it, the breakout to the upside, and thought this was a back test. It never broke out again, and then it broke to the downside. Now it's consolidating at support, and I think it may be getting ready to break to the downside again. We'll just have to see. You might also say, now that I'm looking at it, well, maybe there's some sort of falling wedge in there somewhere where this actually breaks out to the upside. So I'm really not sure on this one. It looks like it's almost wanting to put in positive divergence. It had a double bottom here. So we'll see where it goes. If it breaks out to the upside, maybe that ends up being a long trade again. And I might just sit out just because this chart is so messy at that point. I'm not really sure how to think about it. IAA. This is another one where it's broken down, slow rollover is what it looks like. So I'm looking for a break of the support level to take a short. Blinn. Same thing for Blinn. Although it's just starting to break down, so this is probably your sell signal here. Autodesk. Breakdown, but it looks like it's kind of wedging in here. And so a breakdown below this level is probably a short entry. Otherwise, it consolidates for a while and breaks out in maybe a few weeks to a couple months. BBY, you can see how this one has been kind of in a longer term consolidation. So I'd be looking to play this channel, either a bounce off of this low and a movement back to the high. That's probably, that may be a likely bounce area just because we had such a long wick on this that there may be a lot of buyers ready to step in. But if this does break down, then it's probably going to make its way near this $89 level to fill this gap. Billy, same thing where it's rolling over, uptrend rollover, short the breakdown. CRWD, yeah, it's been an uptrend, transitions into sort of less steep uptrend, so looking for a short. HDV, this looks a lot like Upwork in that it's been in an uptrend, or not Upwork, but one of the other ones, maybe Sono or Snap. I don't really remember. Okay, so HGV, it's been an uptrend. Looks like it has had a blow off top, and that's more clear if you draw a line at the top of that little trend. So it may be a top here. It may be putting in a top. And you can see on the hourly, it's starting to roll over that hourly trend line. So it may be good to put in a short here. The only thing I'm concerned about is, will it bounce here? If it does, that's basically a bad risk to reward. If it keeps going and maybe breaks down all the way to this support level, that might be better. I mean, that would obviously be a much better risk reward. And so that's what I'm looking at there. LTHM, this looks like a slow rollover. It's consolidating to either break out again, and all these patterns that look like they're rolling over, they may be consolidations for a break higher. They may just be going sideways for a few months and then break higher after a while. I think that's just as possible as a breakdown. It just depends on overall market sentiment. How far is this correction going to go? Macy's, same thing. It's just consolidating sideways. MGY, this looks like it's having a blow off top, and I think it on the hourly, yeah, it's right on support. So if it does break down, it's probably got a good amount of downside. Maybe it, I'm not sure how far it falls. It would at least fall to this trend line and then probably bounce and then fall further, is my expectation. Web built, WBT. It's been an uptrend, broke down. Now it's in a shallower uptrend, and it's probably going to break down again. So I would expect to short the breakdown. GDS, nothing new here. It hasn't really started to break down yet. So when it does, I'd probably be looking to sell and then cover around this $89 level. GAU, this is an interesting one. This is a gold mining stock. It, tried to have a breakout, did a back test, and then another back test. So this, I can't tell if this is strong or not. I think if it, continues to back test till it hits support, then it may be a good sign that this is going to finally reverse and break out to the upside. Or it could be, a sign that it breaks down pretty soon. I think gold overall is looking pretty weak, so depending on whether we put a bottom soon or not, well, the gold mining stocks will follow or lead that. Royal Gold looks almost exactly the same, except for it's a falling wedge. So same story. Short below, long above. Roku. This has been a long uptrend. It looks like it's pretty significant negative divergence here, so I'd be looking for, below this trend line, sell that. And it looks like it may be consolidating to break down. You can see basically 1, 2, 3 reactions. We may see a breakdown soon. Maybe this will be a head and shoulders, shoulder, head, shoulder, and then downside from there. So I'm looking to basically short below this blue line. And hopefully that would ideally be below this, below this blue line and below the purple trend channel. Okay, Spotify or Spot. This had a breakout and then it made new highs, but with lower negative divergence, so it didn't really look very convincing. It's consolidating right now. Broke down, did a back test. It may, if it breaks down below here, then I'd be looking to short it to the bottom of that trend channel. So really, this whole outlook depends on what the SPY, what the QQQ, and what the I guess DXY and 10-year yields are doing. That's my opinion. The Fed announced new stimulus, but at the same time, or sorry, not the Fed, but the House or one of the branches of government passed the stimulus bill, and I think it has to go to the other branch. And but at the same time, I think the Fed stepped in last week and said that they weren't really concerned about the bond yields and interest rates rising right now. So if they don't do anything about that, then that's going to be a problem. And that's why I'm kind of neutral on my outlook. I think I really want to play lighter position sizes. Maybe just do intraday sort of trade part of these setups, the parts that play out intraday. I really don't have a great plan for this week. There's a lot of tickers that have good trade ideas on them. I think my plan is to short the market if it breaks down, but to sit on the sidelines if there's a breakout. Because, I don't want to end up longing a rally in a bear market if this actually is turning into a bear market. So I kind of just want to wait and see before I take any long trades, and I will jump on short trades as they come. So probably we'll get maybe a little bit of a bounce next week, and then consolidation and further breakdown if we are going into a prolonged correction. So we're just going to wait and see. I guess that's my plan. And, worst case scenario, I think it's important to remember that take some of these setups and basically control the risk. Set the stop level. If the trade goes partly in the direction and reverses pretty quickly, then that tells me it's a false trade or a trade that's not really ready to get going yet. Maybe a trade that I've entered too soon. So, if I keep that sort of risk management in mind, then it should mean, more successful trading. At the same time, it's, my trading so far has not been super successful. I think I'll have to look at my rules again and see how things are looking to play out, or look at my rules again and see if there's anything I need to change on my strategy to make things more successful. I think, it may have been just entering trades too early. Like a lot of these trades last week played out finally after giving up on them, a lot of the short trades. And by that time I switched to like a long posture. So, having a better conviction on where the risk lies, what side the risk lies on, I think it's pretty important. Right now, because we've moved so far down, there's a good amount of risk to downside if we just start to knife down more. Well, if we'd start to knife down more and I get good setups on stocks that haven't fully broken down yet, that's I think that's a good play. If those stocks start to break down but the market has a significant rally, well, it's likely that those breakdowns won't be, won't reach profit targets. So it's all a game. There's some intuition, there's some that needs to be gained, and then there's some just following the rules to mitigate risk, and it's a weird balancing act that I haven't quite gotten yet. We're going to keep trying, and that's it.